Yeah.
Good afternoon, my friends on YouTube. I am Cesar Rivera of Lima, Peru, certified public accountant. Today I'm going to teach you the trial balance. The trial balance is an accounting report that serves to prepare the balance sheet. It's formed by the ledger book, whose balance goes to this column. The confirmation of the trial balance is the column of particular, the trial balance, debit and credit, the adjustment, debit and credit, adjusted trial balance, debit and credit, the income statement, debit and credit, and balance sheet conformed by debit and credit. Let's analyze all the accounts of the company called Moon Corporation. Let's see the first account, the cash. The company has $20,000 in a strong box that goes to the debit in adjusted and also goes to the column of debit in the balance sheet because it's a proprietorship of the company. Then we have the account bank. The Moon Corporation has $60,000 in the bank. Then we have to make an adjustment because the accountant of the company forgot to register invoices for $5,000. So it's number one with this. Number one, the account receivable. The new debit to 5,000 to the account bank, and we credit to the account receivables by $5,000. Then we sum $60,000 plus $5,000, and it gives $65,000 in the column of adjustment, trial balance, that goes to the column of debit in the balance sheet because it's a proprietorship of the company. Then we have the account called accounts receivable, that are the invoices the company has to collect to the purchasers for the merchandise the enterprise sells. Then we have the balance from the ledger, $70,000 minus $5,000 of adjustment gives accounts receivable net by $65,000 that goes to the column debit in the balance sheet because it's a right that the company has to collect to the purchasers. Then we have the account allowed debt expense because there is some clients of the company that doesn't pay for several years to the company for the merchandise the Moon Corporation has sold to them. The allowance bad debt is $3,000. Then we have to increase the allowed debt, that is number 3, for $18,000 with this account bad debt expense 3 for $18,000, number 3, because this account is increased by $18,000. The difference gives $15,000 net that goes to the column credit in the balance sheet. Then when we make the balance sheet, the value net for collecting is $50,000. So $65,000 minus $15,000. Then we have the inventory. The inventory is $240,000 that goes to the column adjustment, so it doesn't have a movement, accounting movement, so it goes to the balance sheet in the column of debit. Then we have prepaid rent. The prepaid rent are the rent that the Moon Corporation pays to another enterprise which rent to the Moon Company a building where the Moon Corporation makes his administrative activities, and also it has the storage store to sell its merchandise. Then in the month of January of 2019, the company has to earn $15,000 that goes with this account, rent expense to prepare rent for $15,000, the number 4. So prepare rent is $15,000 minus $16,000 gives net $1,000 that goes to the column of debit in the balance sheet. Then we have the fixed asset. We have the equipment for $200,000 that goes to the column adjustment in the debit, and also to the column debit in the balance sheet because it's a ownership of the company. Then we have vehicle for $300,000 that goes to the column debit and also to the column debit in the balance sheet because the Moon Corporation has a means of transportation to transport the merchandise to sell. Then we have the utilities expenses which conform by water and electricity in order that the Moon Company exercise its commercial activities. Then we have $10,000 that goes to the column debit in the adjustment trial balance and also goes to the column debit in the income statement because it's a loss for the company. Then we have the account wage expenses for $80,000 minus $9,000, the number 5. So the account of the company forgot to note in the payroll to one worker to whom it has to pay $9,000. In this entry, the accountant increased the wage expenses for $9,000. Then we have $8,000 plus $9,000 gives $89,000 that goes to the column debit in the income statement because it's a expense for the company. Then we have the number 7, supplies expenses. The supplies are the articles that the company buys to make its commercial activities. For example, pens, papers, erasers, etc. We have $4,000 of adjustment minus $45,000 gives $41,000 net that goes to the column debit in the income statement because it's a loss for the company. Then we have the account sales revenue for $690,000, which are the sales of merchandise that the company makes to its clients. this account goes to the column credit in the adjustment, and then to the column credit in the income statement, because it's a profit for the company. Then we have the bonds payable. These are the accounts for paying to the Bank of New York for that the Moon Company debts, because the New York Bank makes a loan to the Moon Corporation for $170,000 that goes to the column credit, and then in the balance sheet in the column credit, because it's a liability for the company. Then we have the account capital for $184,000, which are confirmed by the stocks that the company has, and this goes to the column credit in adjustment trial balance, and then to the column credit in the balance sheet. Then we have the account rent expenses that we said that is the prepared rent. No? We saw before, this $15,000 goes to the column adjustment trial balance in the debit, and then to the column income statement in debit. Then we have wages payable. This is a liability that the company has to pay to one of his workers for $9,000 that goes to the column adjustment and credit, and then in the balance sheet in the column credit, because it's a liability for the company. Then we have the depreciation and allowance depreciation. Depreciation is the loss of the value of the fixed asset, the equipment and vehicle. For that loss of value, the company has to make this allowance. It charged to the account depreciation for $85,000 and allowance depreciations for $85,000. Depreciation goes to the column debit in the adjustment trial balance, and then to the column debit in the income statement, because it's a loss for the company. Then we have the allowance expenses for $85,000 that goes to the credit, and then to the column credit for $85,000. The value net of the fixed asset at the company is these two values minus the depreciation for $85,000. So the value net that goes to the balance sheet is $415,000. Then we have the bad debt expenses. We saw the number 3, no? Allowance for the invoices that some clients doesn't pay to the company. No? We have $80,000 that goes to the column debit, and then to the column debit because it's a loss for the company, Moon Corporation. And then we have office supplies for $400, number 7 that we saw in this case. We have $4,000 that goes to the column debit, and then to the column debit in the balance sheet. Then we have to totalize all the columns. The columns of trial balance gives $1,044,000. So this equal. Both amounts are equal. Then we have the column adjustment for $136,000 that is equal also. Then we have the adjustment trial balance for $1,153,000. That is equal arithmetically. Then we have the income statement. Both columns gives $690,000, so it's equal also. Then we have the balance sheet. Both columns give $895,000. Here we have to result the account net income. The account net income of the company Moon Corporation is $432,000 in the month of January 31st, 2019. This accounting report is basic to make after that the balance sheet for the Moon Corporation. This is all about the trial balance. I expect that you like my video, and if you like, up the thumb and subscribe to my channel. Goodbye, my friends.